Good morning, good morning, good morning. Welcome to today's morning blast. It is, I don't know quite how, but it appears to be June the 2nd. It's also Monday all day. Michael, what happened to May? This is the first I've heard it's June. It's taken me by a bit of surprise, actually, to be honest.
Good morning, Ryan. Good morning, everyone else. I suppose, given the amount of time you were on holiday in May, it probably is still last
Oh, there
month
we
for you,
go.
isn't it?
There we go. Well, anyway, moving on quickly. So, as usual, this is the morning blast where myself and Michael will be giving you today, as it's a Monday, a review of the weekend and Friday, a preview of today and the week ahead. I'll be listening with more than most because I'll be away from Wednesday by the looks of it. But before we carry on, I'll get the legals out the way. So, as usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or the magnificent Mr. Michael Brown. Also, just quickly before I crack on, thank you again, as always, for the well wishes for my father. A few people have been asking for any updates and stuff. He should be being moved today to the hospital where they're doing his bypass surgery, and then his bypass should be on Wednesday, which is coincidentally probably whilst I'm flying to Vegas. I did volunteer to kind of not go, and he called me a cunt. So so I'm going to well, it might be unrelated to be honest, but yeah, I'm looks like I'm still going, so that's good. But anyway,
Well,
but
he's,
thank you
he's
for
clearly feeling better if he's using your Christian name once more.
hey, that's my business name.
Oh
But
dear.
yeah,
Well, I'm sure I speak on behalf of everyone that Touchwood, and sure everything will go well for him, and he'll make
exactly.
a speedy recovery
Well,
after Wednesday.
it has been noted that I'm probably kind of shorter odds to be kind of in a mess this time next week than he is, and he's the one having surgery.
I didn't want to go down that route because I thought it was in bad taste, but maybe ask him to book a bed next door.
Yeah, right. But anyway, enough about me and my family and my holidays. What's occurring, my dear
What
friend?
is occurring? Well, it was actually quite a subdued end to the week on Friday. Markets just sort of meandering into the weekend, with the S&P and the Nasdaq both closing pretty much unchanged. Some modest selling at the long end of the Treasury curve, and the dollar pretty much flat at 99.50 when you look at the dollar index for the majority of the day. Although there were plenty of headlines on the trade front, which I'll get onto momentarily, and we do seem to be seeing actually a very delayed reaction to that news flow as the new trading week gets underway, with equity futures lower, the S&P and Nasdaq future down by around about 0.75% apiece, and a bit of a sort of sell America vibe creeping in once more, with long end Treasury yields in the 30-year complex at least testing 5% to the upside, and the dollar trading in the red against all major peers as the dollar index slides beneath 99. The euro reclaims the 114 handle, and cable trades north of 135 in early deals this morning. In terms of those trade headlines, as I say, the bulk of this actually came on Friday, but markets pretty much shrugging it off as we moved into the weekend, and then for whatever reason deciding that we want to react to it this morning. The first was a bit of a ranty post from President Trump on Truth Social on Friday lunchtime, talking about how China had violated its agreement with the United States. And Trump also going on to say, and I quote, "So much for being Mr. Nice Guy." What's quite interesting here is that I'm pretty sure this is the first time that anyone's actually alluded to there being an agreement. As far as I'm aware, they agreed to lower tariffs, but they didn't actually release publicly what the terms were that sort of got them to that trade truce. So clearly, whatever those terms were, they have apparently violated them. The Wall Street Journal later reporting that this trade truce was at risk of falling apart, primarily as a result of China being very, very sluggish in terms of getting rare earth metal exports up and running back to the United States. And given that China has been slow walking on that, it has fueled some concerns in the United States and in Washington, D.C. that China could well be reneging on that trade deal. We did hear later
Sorry,
on.
just
Oh,
sorry,
God.
just on that, because this is something that the rare earths thing. This is something that me and you flagged or probably a month or so ago. This kind of flew under the radar for those for anyone thinking that it's connected to the Liberation Day and the tariff stuff. It's not. This was actually China actually put this in place. This almost kind of blanket ban on rare earth exports. They put this in place weeks before Liberation Day and all that came into effect. But it kind of just got lost. And I remember me and you talking about this
Mm.
before Liberation Day and saying, look, hang on, it's a bit concerning that people aren't picking up that China aren't exporting rare earths anymore. And it was very much one of those. If it was any other time, it would be like the biggest headline going on across the wires. But because there was
It got
so much
massively
going on,
overshadowed, didn't it?
yeah, exactly. So it's quite an interesting one. The fact that this is unrelated to stuff that's happened since Liberation Day, but now Trump's kind of going. It's almost like Trump's just realised, hang on, they've stopped exporting rare earths. Um,
Well,
which there's every
you
chance.
I was going to say you jest, but I really wouldn't rule that out. To He's picked up a Wall Street Journal paper from 3 months
Yeah,
ago
right.
or something.
Oh no,
Um,
no, no. He's listening to the blast, obviously.
Oh yeah, of course. Good morning, Donald.
Good morning, Big
Speak.
Don.
Well, Trump did later on Friday. He was giving a rally to a whole host of steelworkers, and he was again reiterating that China had violated a big part of this agreement. But then he said, "I'm sure I'll speak to President Xi, and hopefully we will work it out." We then had that followed up over the weekend with remarks from NEC Director Kevin Hassett and Treasury Secretary Scott Bessent. Hassett saying that he expects Trump and Xi will speak on the phone this week. Saying he thinks they will speak on the phone, quote, very soon. So do bear in mind that at some point this week we may get a phone call between the two. Then again, given the way this has gone recently, maybe we won't. But it does appear that compared to sort of the 2 weeks of relative calm that we had, things are on slightly shakier ground in terms of Sino-US relations than they were when the trade truce was agreed. Sticking with Sino-US relations, we had Bloomberg sources reporting late on Friday that the US is planning to widen its sanctions on Chinese technology. At the moment, my understanding, or at least from reading this article, a cursory glance at it, is that US sanctions on Chinese tech firms only cover the firms themselves. The US want to expand that to cover subsidiaries of Chinese firms as well. So I think that's probably a way that the Chinese have been getting around the sanctions. Well, according to these sources, they are not going to be able to do that any longer. And just going back to the Trump rally that I mentioned, this was primarily around the US Steel, Nippon Steel deal. Of course, Nippon Steel trying to buy US Steel. We came
Still,
out of that rally.
they are still trying to buy US steel.
Well, I was going to say we came out of that rally still absolutely none the
Still,
wiser as to whether they're going to be able to buy them or not. What we did hear, though, is that Trump has confirmed that the US will be increasing tariffs on steel and aluminium imports to 50% from June the 4th. They currently stand at 25%. Trump very much playing up to his base with this one because obviously he wants to bring steel making jobs back to the US. His
still.
logic being if you, oh, for God's sake, his logic being if you raise tariffs on those metals, I'm not going to say that word again, then it will incentivize people to produce them in the United States as opposed to importing it from overseas. Last headline on the tariff front for me for the time being before we get on to other matters. This is
Still.
via Reuters sources over the weekend. The European Union, they are apparently prepared for countermeasures in response to those aforementioned tariffs on metals. The EU saying that they strongly regret the US plan to increase tariffs and that a tariff increase, quote, undermines ongoing efforts to reach a negotiated solution. I'm sure that one will go down very, very well indeed in Washington, D.C. In terms of other bits and bobs from Friday on the data front, we had the latest core PCE data out of the United States, which is, of course, the Fed's preferred gauge of inflationary pressures. Core PCE coming in at 2.5% on an annual basis in April, bang in line with expectations and down from the prior 2.6%. The US continuing this pretty immaculate disinflationary path, although, of course, the risk of a tariff-induced surge in inflation remains. We also had the latest consumer sentiment data from the University of Michigan. Sentiment in May, per the final reading, rising to 52.2. That's up from a preliminary print of 50.8, and actually leaves the index unchanged from where it was in April. Now, just to clarify why we saw such a significant revision in consumer sentiment, this is because the University of Michigan, according to what they've put on their website at least, around 50% of the survey responses come in after the preliminary metric is published. Now, the survey for the preliminary number, which was 50.8, that closed on the 13th of May, which is just one day after the US and China agreed their trade truce. Of course, you've then got half of the responses coming in after that truce. So you've really got this sort of polar opposite between, trade embargo, world's going to end, and actually the market's rallied. There isn't a trade embargo now. Maybe things are going to be much better. So that's why we had that
Do you
significant
know?
divergence and
You
that big
know,
upward
you
revision
know
there.
what? Just on this, I think I'm a big fan of when kind of markets or when situations are stretched, kind of any kind of cracks in data or just methodologies and stuff come to light. And not only that, but also people's portfolios, any cracks in that come to light when markets are stretched, is exact, etc. And I'm a big fan of these kind of times because it really, we saw over COVID, like with remember PMIs became utterly useless over COVID
Yeah,
and
it
whatnot.
was supplier delivery times that
Yeah,
skewed the whole thing,
yeah,
wasn't it?
exactly. And I think that's what we're seeing now again with where we've had so much big kind of seismic shifts in kind of what's going on with tariffs and stuff. One day they're on, one day they're off. And we're seeing really how like the cracks in this kind of sentiment reporting data. How yes, it's fine when not much happens for 6 months, right? That then the data's quite well. It's still it still can be very biased, based on political parties, especially when we're very polarized, which is what we are at the moment in the US. um, and it kind of it brings to light how poor this kind of expectation data, like inflation expectation
Mm.
data, sentiment data, PMIs. It just shows you how bad really and how archaic the data is. I really do think over the next few years, I think the edge people will have will be in these more high frequency data points. When we've seen there was a big drive during COVID about everyone looking for high frequency data. And I think it's the way forward. I don't think the current very well, I'm going to reuse the word again, archaic data sets. I don't think they've got much legs on them anymore. I think there's far more edge out there if you can find better, high quality. I mean, like take it example. People's like to mug off the Atlanta Fed now thing, but it's decent and it does work. It did show that dip, and then it showed the rebound that we're going to have in the next reading. I think it's definitely one kind of theme to watch for the future. But anyway, that's just me thinking aloud.
Indeed, right. Ryan can get off his soapbox now, so I can
Sorry,
carry on.
sorry.
A few other stories from Friday just worth highlighting. Well, there was a sources piece from someone who I can't name because their lawyers will be on to me very, very quickly, that was doing the rounds on Friday, saying that the ECB are going to lower their 2026 inflation forecast. These sources suggesting that the forecast will be lowered to either 1.7 or 1.8%. Of course, the 2026 number currently stands at 1.9%. All of this sounds like very, very modest revisions, and to be honest with you, they are. But the implication is that if the ECB do end up, and of course they meet on Thursday, forecasting an even bigger undershoot of the inflation target over the medium term, then that's going to give the Doves even more control of the policy outlook and further raises the likelihood of them needing to take the deposit rate below neutral. And of course, the bottom end of the ECB's neutral estimate range comes in at 1.75%. So that gives them effectively two more cuts before they need to decide whether they want to go into easy territory or not. Sticking with the ECB, we also heard via Bloomberg on Friday that the ECB are said to be raising their scrutiny of how much exposure some Eurozone banks have to private markets. The ECB finally waking up to the risks that these private credit and private equity markets may have, primarily the fact that no one does mark-to-market valuations. So these things could basically
Well,
be
hang
completely
on.
worthless.
Well, it's mark to market, but it's whose market are they marking to?
Well, Exactly. Apparently, the ECB started this review last year, and they are now sending letters to bank executives and planning on site investigations to further their efforts in this area. So, one to watch there. Lastly, on the ECB, a lot of news flow from Frankfurt on Friday. This is like the most ECB story that I've
Yeah.
ever heard. I'm just going to read you the headline before giving you the details. This is also via Bloomberg. ECB officials are ready to keep working with convicted colleague. Now, don't worry, they're not actually talking about President Lagarde. Instead, they are talking about the Slovak central bank governor, Peter Casimir. Of course, we mentioned last week that he has been convicted for bribery. According to sources cited via Bloomberg, and I quote, officials consider the guilty verdict unpleasant and are mindful of the reputational damage it could bring for the ECB, but want to see the outcome of his appeal before making any
Oh
decisions. I
God.
mean, give me
Fucking hell.
strength, for God's sake. The bloke's a bloody convict and he's now going to set interest rates. But anyway, moving across the channel to here in the UK. The ONS and the UK Statistics Authority, they are apparently looking into how feasible it might be to force members of the public to complete the labour force survey. Of course, we have mentioned many a time on this call about how unreliable UK economic data has become. What the ONS are now looking at is the legal and practical implications around making these surveys, whether it be on employment and things like that, mandatory for households to respond to, because obviously response rates have absolutely fallen off a cliff. This sounds like clutching at straws, to be completely honest with you, but we will see what happens with that one. Over at the Treasury, meanwhile, Chancellor Rachel Reeves, she has nominated the chief of the OBR, Richard Hughes, for another 5-year term because
Of
he's done
course you
such a
have.
well, he's done such a brilliant
Yeah.
job since 2020 that why not reward that failure? And sticking with the Treasury, we heard after the close on Friday that the UK, and this is actually quite significant news, the UK has now completed its exit from NatWest. Of course, the taxpayer bailing out NatWest and RBS, of course, at the height of the global financial crisis over 15 years ago. The UK now has no shareholding whatsoever in NatWest for the first time in a decade or so. A lot of people have been ranting away on social media at the weekend about how the UK has lost X number of billion as a result of the intervention and selling the shares. I would just say, just imagine the counterfactual, and actually, it's not even worth imagining the counterfactual because if the UK government didn't step in and nationalise NatWest and bail out a number of other banks, then
Yeah.
we probably wouldn't even have a financial system. We wouldn't be sat here talking right
No,
now.
yeah, and
So
exactly that, and also this whole argument. Oh, well, look at the chart. They should have held on. It's like, oh, do me a favor. Do you really want? Yeah, I don't want Rachel Reeves, etc., trying to make calls on on what the chart's saying.
no,
If they want to get out, fine. Look, we do need the money. Yeah, it'd be great if they would held on to it and it goes higher. But what about if it just went sideways for 4 years? You can't play a game like that. Not at this level.
no. Absolutely not. So more social media nonsense there. The last two things from me. The first in the chip space, TSMC. They are apparently looking at building a chip plant, an advanced chip plant in the UAE. They have been discussing this plan with officials in the Trump administration. Of course, a lot of focus on the chip sector in the UAE at the moment. A lot of Middle East in general, trying to become this sort of AI superpower. Nvidia flogging a whole load of chips over there, so I would expect more people to follow suit. And lastly, in terms of news over the weekend, on the commodities complex, OPEC Plus, they have agreed to hike supply by a further 411,000 barrels per day in July. Importantly, we did have a number of sources stories on Friday which suggested that OPEC were actually going to discuss potentially a bigger output
Yes.
hike in July. What they've actually agreed is a hike that is the same as it was in June and the same as it was in May. And that is why we see crude benchmarks trading about 3% higher this
Yeah.
morning. A number of questions on that going, there's more supply coming on. Why is crude higher? Well, the reason for that is OPEC have basically spent most of Friday priming the market for an even bigger
Yeah.
output hike. And then they actually delivered a hike that was below market expectations. So that is why we've seen crude rally across the board this
Exactly that.
morning. And for the time being, that's all from me.
Awesome. Thank you very much, Mr. Michael Brown. So, just rattling off some of the choice headlines from our wonderful overnight news roundup via Zach. Check our Substack, pin tweet, etc., etc. So, starting off with trade, as we usually do. Trump cranks up
He's
steel
not.
and
He's going to stop listening now.
no, exactly. Trump cranks up steel again and aluminium tariffs to a scorching 50%, double duties from 25%. Trump's bold moves aims to shield US industries, igniting fresh global trade skirmishes. US China trade talks wobble. Trump and Xi call looms this week with negotiations faltering. Besant and Hassett pin hopes on a high stakes leader to lead a chat to full tensions. China cries foul, vows fiery retaliation over US trade deal breach. Beijing's Commerce Ministry slams Washington's tariff hikes, threatening countermeasures to safeguard its economic turf. Moving to Japan, Japan's Shiba, sorry, plots Washington dash to clinch Trump trade deal. Eyeing a pre G7 summit, Shiba leverages Akazawa's groundwork to soften Trump's tariff hammer. Sticking with Japan, Japan's Akazawa gears up for trade showdown, deal in sight. Another Washington trip this week fuels buzz of an imminent tariff relief pact. And what this is
Well,
something we
well, it's
have,
been imminent for the last fucking
yeah.
5 weeks.
But what we have seen, there's definitely been a bit of a rush since this court ruling came in. It seems like Japan are looking to use that as maybe a little, like we said on last week, a little kind of chink in the armor. Oh God, don't do the eyes.
Oh no, wrong.
Germany's MERS jets to
Just move
Trump's
on.
side.
Just move on quickly.
Germany's MERS jets to Trump's side, chasing trade harmony. The Chancellor's first Washington trip, that's Germany's Chancellor, first Washington trip seeks to forge a tariff truce and cement US German bonds. Bonds as in kind of cooperation rather than government bonds. Costco outsmarts tariffs with savvy sourcing, order tweaks. We heard this on Friday as well. Costco shifting supply chains and fast tracking orders to keep prices steady. I think that there's a lot of political kind of twos and fro's with this because Trump has come out and said, literally specified companies like Costco and Walmart that he doesn't want to see them increasing prices based on tariffs. So, to try, you can see that Costco and Walmart, etc., are looking for ways not to have to do that. Moving to macro news, oil prices roar back, as Michael said, as OPEC Plus plays it safe for the output hike. As Michael said, even though it's in line with what was expected originally, we did have a lot of kind of sources from OPEC suggesting, hinting at a bigger hike. Dollar braces for a for a gut punch plunge by mid 26. That's according to Morgan Stanley. Fed rate cuts and
It won't
sluggish.
happen then.
No, exactly. Fed rate cuts and sluggish US growth could drag the greenback to depths unseen since the pandemic, according to Morg. So yeah, we'll see what happens there. Trump unlocks Alaska's oil treasure, axing Biden's drilling bans, targeting 8.7 billion barrels with a B. The move fuels energy ambitions but stirs fierce environmental backlash. Sticking with Trump, his $4 trillion tax juggernaut hits GOP roadblock over deficit woes. Republican lawmakers are balking at the colossal bill's fiscal toll, threatening Trump's economic vision. Fed's Waller keeps rates cuts in play, shrugs off tariff sparks. Fed's daily breathes easier as cooling inflation eyes tariff perils. Moving to China, China's factories. Oh, gone. What's that?
Sorry, I'm choking here.
You're right. Oh, he's muted
Yeah, I'm
himself.
fine. I'm fine.
Okay. China's, I thought we lost him. China's factories splutter, trade frictions choke May PMI. As we were saying about PMI, I'm not a big fan at the moment. A second month of contraction highlights the toll of US tariffs on China's export engine. Moving to Japan, Bank of Japan, goods for rate hike, stockpiles, bond loss suffers. Uh, Record provisions signal banks' readiness for yield spikes amid global trade uncertainty. I believe, if I recall correctly, I think I saw the headline yesterday. I think we posted it yesterday, actually. The Bank of Japan are now provising for 100% in terms of their against yield spikes. In geopolitics, Hegseth sounds alarm on China's looming Pacific threat. The US Defense Secretary urges Indo Pacific allies to ramp up defense budgets to counter Beijing's bold moves. Taiwan reels under Chinese relentless May military squeeze. Daily warship deployments escalate Beijing's pressure campaign, rattling the nerves across the strait. I'm sure everyone's heard the headlines coming out of Russia and Ukraine over the weekend. Ukraine's drones obliterate 40 Russian warplanes in a daring raid. The massive strike on military airports delivers a crushing blow to Moscow's air power. For those that aren't aware, basically, Ukraine shipped in into Russia containers basically containing drones and then remotely opened the containers and flew the drones out of them. Which is kind of a new kind of development in the how the modern warfare is being played out.
There's
You just
also,
go on.
I was just on that. I'm obviously no military strategist whatsoever. Some people say I'm not even a market strategist. But one thing that is worth bearing in mind is basically every air force in the world does what Russia did, which is just keep your jets parked outside next to a
Well,
runway somewhere. So I'd imagine there's going to be a hell of a lot of investment in ways to stop drones blowing aeroplanes up now.
Well, exactly that, and also, yeah, you can't exactly put well, you can't exactly put massive bombers under under roofs and stuff. So yeah, it's I actually tweeted yesterday. It's it's a brave new world for warfare because there's nothing to stop any other enemy doing it to any other country, basically.
Yeah.
But finally, on geopolitics, before I move on to some equity headlines, the Philippines dangles olive branch to China over the South China Sea. Manila's openness to a deal aims to diffuse maritime clashes amid rising regional stakes. And finally, before I move back to Michael, equities, Nvidia joins MediaTek to storm gaming laptop chip market. The ARM-based APU with Blackwell GPU targets gamers, bolstering Nvidia's tech dominance. Michael alluded to earlier on, TSMC Arizona hits full throttle, price hikes loom for top clients. Apple, AMD, and Nvidia max out capacity as soaring demand drives up production costs. People are still claiming that Nvidia is just kind of budget sheet or balance sheet kind of shenanigans, but it obviously isn't. BYD's EV Blitz targets Japan's 18 billion mini car kingdom. The 2026 Kai car launch aims to disrupt Japan's auto giants with electrified flair. Samsung bets big on Perplexity AI, revamping device search. The investment integrates cutting edge AI search, aiming to redefine Samsung's tech ecosystem. Moving to some pharmaceutical news, Moderna's COVID vaccine gets US nod, but access stays tight. RFK's Junior's HHS leadership limits approvals, signaling a cautious shift in vaccine policy. And finally, Sanofi snags blueprint medicines for 9.5 billion. Drives that's dollars. Dives into rare diseases. The acquisition turbocharges Sanofi's push into high growth immunology, whatever that word is, therapy markets. And finally, from me, AstraZeneca's breast cancer drug shines eyes oncology crown. Stellar trial results position the drug to lead in stopping mutating tumors early. No pun there. It's just a serious headline that I thought was worth flagging. And back to you in the studio.
Very good. Thank you, Ryan. In terms of today and the week ahead, then, of course, as you alluded to earlier, we are already in June. Where has the year gone? As a result of the new month kicking off, we have a whole host of manufacturing PMI surveys due
Yay!
today. The final figures from the Eurozone and the UK will drop at 9 o'clock and 9:30, respectively. And then at 3 o'clock this afternoon, we have the ISM manufacturing survey out of the States. That index expected to rise to 49.5 from a prior 48.7. Also today, a few speakers of note. We are due to hear from the Fed Chair Jay Powell. He'll be speaking about 6 o'clock this evening, as well as the Fed's
Yay!
Goolsbee and Logan. We'll also hear from the BOE Green and Catherine Mann, who, well, anyone's guess as to whether she is a hawk or a dove today. Moving into the remainder of the week, just to go through day by day. Tomorrow, we have the latest inflation figures out of the Eurozone. Headline CPI, that is seen falling to the ECB's 2% target on a year on year basis in May, down from the prior 2.2%. Core inflation, that's also seen falling to 2.5% from a prior 2.7. Also on Tuesday, we get the latest factory orders and job openings data out of the United States. And it's another busy day in terms of speakers as well. The BOE Governor Andrew Bailey, Deputy Governor Sarah Breeden, and external MPC members Catherine Mann and Dingra are going to be testifying to the Treasury Select Committee. We're also due to hear from Bank of Japan Governor Ueda on Tuesday as well. Into Wednesday, it is services PMI day, so we get final figures from pretty much everywhere, and then the ISM services index out of the States, that's expected at 52.1, up for a prior 51.6. Also on Wednesday, we have the latest ADP employment figures out of the United States. Of course, that is as a sort of precursor to the labour market data, which we get on Friday. We also have a policy decision on Wednesday due from the Bank of Canada. Bit of an interesting one. Money markets pricing, sorry, forgive me. The sell side consensus is for a 25 basis point cut from the BOC, lowering rates to 2.5%. Money markets, though, only pricing a 1 in 5 chance that the BOC do indeed deliver that rate cut. So it could be some vol in the loony for any traders out there. Moving into Thursday, it's ECB day with a 25 basis point cut expected and fully priced in from Lagarde and her colleagues, likely to be accompanied by a relatively dovish message, particularly given the downside growth risks, likely lower inflation forecast in the mix as well. Of course, we'll also be hearing from President Lagarde and maybe Vice President de Guindos at the post-meeting press conference as well. And then on Friday, it is Jobs Day with the latest US
Yay!
labour market report due. At the moment, headline non-farm payrolls, they are seen rising by 125,000 in May, down from the prior 177. Unemployment set to hold steady at 4.2%, and average hourly earnings seem rising by 0.3% on a month-on-month basis. We also have jobs data out of Canada on Friday lunchtime as well. And just lastly, do bear in mind that Friday is the close of business on Friday. The Fed's pre-meeting blackout period will get underway, so that will
Yay!
be the end of hearing from them for a while. And of course, just lastly, as always, bear in mind the potential for trade and geopolitical headlines as we move through the week, and also anything on the fiscal front in the United States as well. And for the time being, I think that is all from me.
Wonderful. Well, thank you very much, Mr. Michael Brown. Listeners, as always, thank you very much for tuning in. We really do appreciate you. If you are trading, keep it tight. Whatever else you're doing, stay safe. And yeah, we'll see you all tomorrow. Much love.
For now.